Ons goodness, gaan het vandag? Well, it is a Tuesday. So what we do on a Tuesday is we're going to chat about insurance. Now, obviously, I've got more than 10,000 hours. I've been doing it, wow, 35, yeah, 35 odd years I've been involved in financial planning. So I kind of know what I'm talking about. I always say to people, oh, I don't know, I'll find out. I've only been doing it for 35 years. But what I wanted to do today is to kind of start everything off. Is I thought let's start with um, where it all started. What is insurance? And then I'm going to take you through a journey where I'll start explaining stuff to you, like what is an endowment versus a unit trust and all that. But I digress. Let's not jump too far ahead. So, welcome back to the No Nonsense Guy. Here we cut through all the bullshit, confusion, and we just serve up the facts for you. And that's what we like to do. In today's episode, we want to cover a journey through time with a concept that's both ancient and oddly modern. So that's our insurance and that. So before you yawn and reach for your phone, just stick with me. Insurance has been around longer than sliced bread, and by that I mean literally thousands of years. Plus, where else can you learn about history and find out how Babylonian merchants invented cover without WhatsApp? So let's go to its ancient origins, and we'll rewind and go back all the way to ancient China. Now we're looking at this. The time here is about 3000 BC, okay? And Chinese merchants, what they actually did is that they divided their goods. So that would be their rice, okay, say 10 ships. So they would divide it among multiple boats, okay, to minimize the loss if one boat sank. So in other words, we all put, let's say there's 10 boats, we all put a ton of rice on each boat. If one of the boats sinks, at least you've still got 900 kilograms. Yeah, you've still got 900 kilograms of rice left. Okay, so it was really an early form of risk diversification, which at its core, the principle of insurance was used. And this transpired later to the Greeks and the Romans as well. So a little closer to 2025. Well, I mean around 1750 BC. So we're starting to come towards the year 2025, and we go to ancient Babylon. Now, the Code of Hammurabi, okay, so I hope I'm saying that right, Hammurabi, basically was the first written legal system, laid out early principles of insurance. So merchants who borrowed goods, okay, could actually pay a little bit extra, and that would guarantee that the lender wouldn't take the loss if the goods were lost or stolen during transit. So basically, I go to the baker or the wine merchant, who's a good one. I load up a whole lot of wine. I then say to him, I'm going to go sell the wine, but here I'm going to pay you a little bit extra that if I, lose it or it gets broken or anything along the way, um, I'm covered. I don't have to pay you back. So yes, your courier parcel protection plan has its roots in Mesopotamia. And even back then, somebody probably said, insurance premiums, they're just killing me. So then what we do is we jump ahead to the ancient Greeks and the Romans, where the ship owners would actually pool their money together to protect against loss at sea. So basically the same as the Chinese. If your ship sank, the group covered you. So it's a lot like the old mutual societies, the old mutuals and the Sunloves. If your boat didn't sink, you helped Bob rebuild his after Sidon got a little bit moody and destroyed his. So what we're looking at is then in medieval times, we move over to guilds and risk pools. So fast forward to the Middle Ages in Europe, this is where guilds came in. Guilds were basically groups of craftsmen who pooled money to support members in times of illness or death or economic hardship. So think about it like a GoFundMe, but with more ale and fewer hashtags. These guilds were the original sort of mutual insurers, like I have already mentioned. If you were a blacksmith and broke the leg, the guild had your back and possibly even your anvil. Then we have a look at modern insurance and when it was born. So we now go to London in the 1600s, okay, AD now, so we're really moving along fast. Specifically a coffee house owned by a guy by the name of Edward Lloyd. So Lloyd's Coffee House became a meeting spot for all the ship owners and the underwriters. So in other words, we called it the discoveries and the clients. There were no brokers in those days. So basically it was like that Tinder for maritime risk. Swipe right if you insure my cargo of tea going to India. So this evolved into Lloyd's of London. Have you heard of Lloyd's of London? This is still one of the world's most prominent insurance markets today. Okay. Then came the Great Fire of London in 1666, which destroyed over 13,000 homes. Okay. That disaster made people realize that, fire insurance was a good idea. Enter Nicholas Baldwin, who started the first property insurance, and that was shortly after that. So into the modern era, okay, by the 18th and the 19th centuries, insurance had expanded to life, health, and accident coverage as industrialization took hold and risk multiplied. And so did the need for protection. So life insurance, for example, took a while to catch on because people thought it was like betting on your own death. And a lot of people, especially wives, they get to join their eyes, when insurance are also 10 million. So to be fair, it sounds like something only a professional poker player would enjoy. So then governments also started regulating the industry, ensuring that companies had enough money to pay their claims. So they've got your back. And today we've got something called a TER, okay? And it's also a government stipulation in terms of how much reserves a company needs to have. This helped build trust, and obviously it gave birth to the modern, highly complex actuarial system that we know today. So where are we today? So today's insurance is woven into everything, okay, from your car to your house to your pet iguana, and even your voice if you wanted to. Yes, some things actually insure their vocal cords. So we assume that the underwriter has really good hearing. I've even had people models that insure their legs. If their legs are, if they're a leg model or a foot model. So technology is also reshaping the landscape though. So now with AI-powered underwriting, telematics for vehicles and peer-to-peer insurance models, it's faster, more personalized, and occasionally a bit confusing as well. Okay, so next time you've grown about the monthly premium, just remember this. You participated in a tradition that dates back nearly 4,000 years. It's not perfect, but it does beat rebuilding your house with a goat and a prayer. Thanks for listening to the No Nonsense Guy. If you enjoyed this, a little mini history lesson with a twist, albeit, okay, share with a friend, share with anyone. Give us a like, give us a follow, subscribe, okay? Until next time, keep your risks low and your deductibles very, very reasonable. God bless. Till next time, use the brain that God gave you.